Loved ones, Management 4234, Intermediate Entrepreneurship. This is session 30. This presentation will take the place of what would have been a fun, interactive classroom discussion. This is the day that you turn in your critiques of the Palmer Safety Systems business plan. And what we would have done in class is, optimally, I would have put this stuff up on a PowerPoint presentation, or forgive me, I would have brought it up on folio and we could scroll through the plan and point out the different sections. I don't have that option available to me because I'm now, because of the Georgia shelter-in-place thing, I'm now filming from a satellite classroom. Yes, that's a fancy term for my deck. And I just saw in the edge of that screen a leaf blower because I had to clean the classroom. Oh dear. Forgive my oversight. So again, today is session 30. It is on the syllabus, the due date for the business plan critique, and then we're having an open forum discussion, and that's what we're doing. Sadly, this is me filming something rather than us having an interactive discussion. There'll be at least one other video. I haven't decided the date or the session, but there'll be at least one other video, and the theme, the objective of that remaining video will be a wrap-up of sorts. Wrapping up the semester, talking about summer and fall, wishing those of you who are graduating well, and expressing my deep regret that we had this semester just truncated, just chopped off in sometime in May. So let me start on the Palmer Safety Systems thing. Again, this is in no way awkward, but I will be alternatively going to the business plan itself and then looking at my notes, the things that would have sort of led our interactive discussion. So I'm going to look at the plan sequentially, just from page 1 through the end of the plan. And of course, I'm not going to read it to you. I'm going to look at sections and I'm going to share my comments. I desperately wish we could be in class together so that I could hear yours. To hear your perspective would be very valuable, but I'll see it when I read your business plan critiques. So clearly, in terms of presentation, I would say to you that the title page, which was scrubbed, there were some data that weren't there, like the members of the venture team, and the table of contents are very well done. They present the start of this plan well. In fact, presentation throughout the plan in its entirety is well done, and that's a big deal. That's a very big deal. So I want to talk now about the more important issue, and that is the content, not how it's presented, but what is in this plan. And I'll start with the executive summary. There are things fundamentally, the executive summary is well written because it draws from every section of the plan. And in the course of 2 pages, this executive summary is 2 pages in length. It touches upon every major section of the plan, and it presents a quick summation so a reader could get a keen sense for what she or he was looking at throughout the rest of the plan. So the executive summary is fundamentally well done. The only thing that I find distressing, or when I say distressing, it's more fair to say that I dissent. Somewhere in there, the writers, the new venture team that prepared this thing, talked about this business being scalable, and I don't see that. My sense is that this is a one-trick pony. If it ever leaves one relatively small industry that it's serving, it would be insignificant. It's not like somebody's developing an alternative for the pneumatic tire, which would be on 170 million vehicles in the United States. So I could be wrong, but they make the observation in here that they think the business is scalable, they can ramp it up and make it big. I dissent. I don't think that that's achievable. So let me jump now to concept and overview, 2 pages in. I'm on page 3 right now. They make an observation which I take to be factual. I did not verify this, but I'm sure that the data exists. They say that the annual death rate for tractor rollovers, that is the target on the wall, to stop tractor rollovers or have a response mechanism if that happens, is 224 deaths a year. I can't imagine how many thousands of teenagers die a year because they're driving and texting at the same time. I know it's several thousand. to suggest that we're going to create a business that would save 244 lives a year, 224, forgive me, is a curious foundation. A curious foundation, really it is. Appreciate the fact that 3 million people a year die in the United States alone. 3 million people. That's roughly 3,000 a day. And this business is literally saying the target on the wall is we're going to see if we can, to some degree, mitigate the 224 deaths a year out of the 3 million that take place. So, again, it's just well that you consider that, what I think is an imbalance. Now, as they talk about this, let me read a couple of things. I'm still on page 3. I'm in the solution. Not all rollover accidents can be prevented. Tractor operators work in remote areas, often by themselves. Accidents could go unnoticed for hours. Injuries that are aggravated could turn fatal. The main purpose of this service is to immediately dispatch emergency medical service to the accident site. All right, 2 or 3 sentences before that. Remote areas. I want to talk about tractor rollovers because, again, you're familiar with this plan. You know that is the theme, to either be an alarm that precedes it or to send a signal after a rollover has occurred. I grew up on a dairy farm. I still have many friends who are active farmers, both with the stockmen and with people in row crops. If you think about farming, the very definition of tillable land means that it's relatively flat. So if the area of operation for tractors is relatively flat, the chances of rollovers are significantly decreased. The place where farmers tend to roll tractors over is not when they're cultivating stuff, but if they're literally trying to cross a ditch to get to a tillable field or something like that. So the point is that I don't care where you are in the country. I've got friends who farm in Idaho, in the Midwest, in New England, in the South. I've got friends who farm in most parts of this nation. Tillable land is flat, and I don't dispute that there are tractor rollovers, but they generally have they're again 224 deaths a year by any standard. If you put 224 over 3 million, you get a pretty tiny fraction, don't you? So, but the point is that when they say the main purpose is to immediately dispatch emergency medical services to the accident site. If the argument is the tractor operators are in remote areas that are sufficiently hilly and inaccessible that they're going to roll over, virtually every ambulance in this country is a 2-wheel drive pickup truck, a rear-wheel drive truck. Some of them are vans built on truck platforms. Some of them have a traditional pickup cab and an ambulance body on the back. But virtually every ambulance in this country, in this entire nation, is a rear-wheel drive truck. That's the first thing that I would point out. A vehicle like that cannot get to these remote, hilly accident sites. The second thing that's true is when they say they're going to immediately dispatch EMS, I don't dispute that they could have a signal that an accident happened on a farm, but we're talking farms in rural counties. How many farms in rural counties have GPS units in all of their vehicles or the software to convert map grid coordinates to an accident location, to a GPS signature? I don't have an answer to that. But most rural counties, every dimension of the county is underfunded. In my view, I wouldn't expect them to have state-of-the-art equipment. And again, if they had the GPS or the map software conversion feature, is still riding in a rear-wheel drive pickup truck, which likely could not access whatever this accident site is, because by definition, the accident would take place in hilly terrain. So again, I lose my enthusiasm for the viability of this plan relatively early. I'm still in concept and overview, and I'm on page 4 right now in the business model. I think the fundamentals of the business model seem good, simply as I read it. I really have no misgivings about anything there. Um, so I'll move to the product and service offering. That starts on page 5. The first thing that I pulled out of here, to me, is profoundly significant. I'm now on page 7. And on page 7, we are told by the new venture team members that USPTO, the Patent and Trademark Office, has awarded Palmer Safety Systems a patent pertaining to the operational logic of the Ronex device, its process flow. That's enormous, because although the founders of this company didn't create anything new, this device, which they call Ronex, which will be installed on a tractor, basically has 3 pieces to it. It has a tilt sensor that would just literally identify some angle of departure from horizontal, and at some point it sounds an alarm. So there's a tilt sensor in this thing. There is a satellite radio transceiver. It can transmit and receive signals. It has to receive signals for the GPS coordinates, and it has to be able to transmit signals to get the accident awareness out to this local EMS unit. And then, of course, it has a receiver for the global positioning system. So this device that I'm pointing at in the business plan on page 6 has 3 pieces to it. And what the folks at Palmer Safety Systems have done is, first of all, they've taken tech that already exists, these 3 things, put them in a little plastic box. I guess it's plastic. I don't know what it is. And they're outsourcing production. And none of that is bad. None of that is bad. But the critical piece is the fact that they have a patent on the operational logic of the device, and the fact that they have intellectual property protection is huge, because this is a tiny company. A firm with a bigger R&D department could crush them if it were to beat them to market. Now, in this product service offering thing, they talk about product extensions, and they talk about other outdoor activities: construction, logging, law enforcement, mountain climbing. Again, that's intriguing, because one of the things that many new firms do is they successfully launch on a single product, but they realize very quickly that they cannot rely on that they cannot be a one-trick pony, because other firms with more power will attack them and beat them down. So what they're talking about doing is, once they get some traction in this ag industry market, they're going to try to develop product extensions for other applications. And they talk about specific things that are outdoor activities, which to some degree are high risk. So again, the fact that path, they've kicked the door open, is commendable. I admire them for that. Now, I'm in the section on market research right now, which starts on page 8. And they talk about 2 things here, but they don't develop it much in the market research thing. Their thrust is to install these devices on newly manufactured tractors, new ag equipment. At other places in the plan, they talk about perhaps retrofitting these things to older units, because they're probably, in fact, I think the data are in here, there are probably something like 5 million ag tractors out there that would not be new manufacture. They're already in the market. So to be able to retrofit these things would strike me as being significant. But the one thing that I really find distressing in here, this section under market research and analysis is entitled Regulatory Drivers, and I know you've read it. I doubtless you have commented on it in your paper. They talk about OSHA regulating corporate farms and USDA, Department of Agriculture. So here and in other places in the plan, the new venture team members make it abundantly clear that they're going to try to use regulatory agencies as market drivers. And that is so flawed on so many dimensions. The primary thing is, this tech is unproven. These devices are not in any tractors, so there's no way that any regular agency is going to say, y'all put that on your machines. The second thing that's true is there is no conceivable circumstance that anyone in this industry would ever be a sole source vendor. There's no way that Department of Agriculture or Occupational Safe and Health Administration would say, tractor manufacturers, you must put the Ronex device on your machine. They might say, you must put a device on your machine that has a tilt sensor, an audible alarm, GPS capability, and a transceiver to send a signal to a local EMS thing through a call center. But they might say that you have to have that device, but there's nowhere they're going to say you must put Ronex devices there. So if these federal regulatory agencies said to everybody that manufactures ag equipment, this stuff has got to be on board, I can assure you there'd be a rush to market from everybody in the industry. And whether or not Palmer Safety Systems gets trampled or emerges strong and well is certainly, it's uncertain. We have no idea. But the point is, one company cannot say, oh, we're going to have these federal agencies insist that the tractor manufacturers put our stuff on board their machines. Ain't going to happen, not in 5 lifetimes. And that is troubling, the fact that they seem to rely on that. So, now on page 10, I'm in the marketing plan, and this reveals the size of the market. They expect to sell by the end of the 5th year, they expect to sell about 27,000 units a year. Okay, that isn't bad. They're going to ramp up from about 6,000 in year 1 through 27,000 in year 2. And in my notes, I don't have those production figures as a percentage of the total market. I don't know how many new tractors are manufactured a year. But I'm going to jump ahead to page 12, not because I'm rushing, but there's something here that kind of relates to that market. I'm still in the marketing plan. And in the section called Distribution and Service Channels, I've got to read this to you. A benefit of Ronex to tractor manufacturers is that it becomes a competitive differentiator. Okay. The sentence before that, they say, Palmer Safety Systems will target the big 5 tractor manufacturers, John Deere, New Holland Case, Kubota, and AGCO, to become a first-tier supplier. So they're going to target all 5. That's the entire industry in the United States. But then they say it'll become a competitive differentiator. It's only a differentiator if it's different from what other people are doing. If they want it to be a differentiator, one company could say to them, and this has happened often, Apple has done this with Verizon and with other cell phone providers or network providers. Apple will say, for 2 years, you get exclusivity with our machines. John Deere is not going to say, we're going to buy this if you're going to sell it to everybody else in the industry. You see my point? If you're going to differentiate, there's no differentiation if absolutely every new unit in the industry has it. So nobody has any motivation to have it unless it's a regulatory requirement, and we are not there yet. So the notion that it's going to be a differentiator, I just think is deeply flawed. It just shows an inability. It's a bogus assertion. If you're going to sell to all 5, there's no way it differentiates among any of them because everybody has precisely the same stuff. And then in the section on promotion, they talk about we will work with OSHA and USDA to achieve brand awareness. Ronex serves the objectives of these agencies. Again, this reliance on having 2 major federal agencies favor one vendor is never going to happen. There will be competitive bidding. Minimally, there'll be competitive bidding. And then in the last section, last little bullet point under promotion, they say we will identify and target the decision maker, the farm safety manager, equipment maintenance manager, through direct promotion to the 96,000 farms that are subject to OSHA regulation. How precisely will you get a mailing list of those 96,000 farms? And why would you target the decision maker the equipment manager or the farm safety manager if you're selling them to the OEMs and they're going to be installed on the tractors at the factory. I simply want to share with you that I am confused. How do you reach these 96,000 farms, and is it the OEM manufacturer that makes the decision to put on the tractor, or is it the farm safety manager at the 96,000 farms subject to OSHA regulation? I'm simply confused. And confusion is not a good thing to build into a business plan. Operations, I'm on page 13. The manufacturing strategy clearly is outsourcing everything. We outsource all sub-assembly manufacturing. We simply assemble them. That's all we do. We assemble them. Good strategy. Dell has done that for 35 years brilliantly. So I have no misgivings about outsourcing and retaining the assembly piece in-house. The call center is so underdeveloped, I have no words. The call center is supposed to be a nationwide link between the farmer and the local EMS people. Because remember, if there's an event, this machine, this Ronix device, sends an uplink transmission, which is beamed down to the call center, and the call center gets it right to the EMS people. The call center gets exactly 5 lines of text, and it probably is the single most important feature, not the box, but the ability to grab the message and transmit it to EMS. So it is woefully underdeveloped. I'm stunned. And they have to have a database for every user and contact data for the local first responders. That has to be in their database as well. Every individual user, every tractor install, which probably would just be like serialized, like a number. But in that database, that identifying number, that unique number, would have to be paired with whatever the local EMS responder people turns out to be. And they don't talk about staffing for an operation that's 24/7 that covers the entire nation. Again, when I say woefully underdeveloped, it's terrible. It's absolutely terrible. This enormously important piece, it gets 5 lines of text. And they ignore the complexity and so many other things. In the on the next page, I'm still in that same section, operations. They talk about key suppliers, and to their credit, they identify each of the companies whom they've already chosen to be the primary suppliers. Analog devices for the dual axis accelerometer. Motorola is the supplier for the GPS receiver, and they also have a secondary supplier, and they have National Semiconductor for wireless communications. So they've identified major companies who will do the heavy lifting in terms of the component pieces. So again, that is to their credit, the fact that in this section they identify the major suppliers, which suggests to me that they've had important dialogue with them, important conversations. So now I'm in the section that talks about economic issues, and I found this relatively vague, and I actually had to jump back to the appendices to read the financial statements to bring this thing to life. Here's what I found. So I'm in the section called Economic Characteristics, and I think it's only 2 pages long. Yes, it's 2 pages long. That is not a criticism, but it's vague. So since it was not clear to me, I went back to the appendices, and here's what I found. This business plan presents 5 years of operations and financial position and cash position, and that as well. I found in year 5, at their pinnacle, at the peak of their operational success, their revenue will be about 8.3 million, and their net income will be about 1.6 million. That's quite a positive relationship. That's literally, your net income is essentially 20% of their gross sales. That's remarkable, since they don't manufacture anything and they outsource all the production. But I have a question, which you don't have to answer. If your company, at the peak of its success, is generating $8 million a year in sales and $1.50, $1.6 million a year in net income, does that have sufficient size to attract a venture capital investment? I don't have a good answer. Because relatively speaking, it's tiny. Because it serves a tiny, discrete market. Again, I can't answer that, but that's something that, as I read this plan, I was concerned about that. The other thing that I want to point out is in this economic characteristics thing, there's no discussion whatsoever about a liquidity event. Will we seek to be acquired by a bigger company? Will we have an IPO? What's the deal? Now, in the financial plan, they do talk about that, and that may simply be their preference. They thought it well to present it there rather than an economic characteristic. So let's take a look. The first thing that they say in the opening sentence or opening two sentences is in the startup cost that there is no staged investment. They're seeking roughly $500,000, $470,000. And second sentence, the funds are needed in the first month of the startup phase. So their expectations are that some equity investor in the first month of not even operations yet, because they're not doing anything, an equity investor is going to stroke a check for $500,000 and say, here's all the money, enjoy yourselves, go do important stuff. I would say the probability of that approach is zero. Nobody that invests in private equity does anything other than milestones. They invest in stages. They might give them $150,000 to do a couple of things, and if they complete that successfully, they'll push on. But my point is, they're asking for the entire desired sum of private equity to be given to them in the first month of operations. Now, in the same section, I was really struck by this. Working capital needs. Cash flows from operations is positive in the 6th month of the first year. I'm not sure that drug dealers are cash flow positive in the 6th month of the first year. That is a very bold assertion, and it's likely unachievable. That's the sort of thing that's so wild that I think a lot of investors would say, these people are smoking cigarettes that don't have printing on them. They're apparently upstairs with the econ guys, token on joints. Just guessing, I don't know. But cash flow positive in the 6th month of the first year. That is stunning to me. Absolutely stunning. And I think unachievable. So now, new section. I'm in risk reduction and mitigation plans. We have talked about in class how truly significant this section is. The critical risks and contingencies. What risks do I face in the course of ordinary business, not nuclear war, not coronavirus, but what risks do I face in the course of ordinary business that are high probability and high impact? And if I identify a risk that's high probability, high impact, then I develop a response plan for it. This section is only a page long, maybe? Yes, this section is 1 page. They identify 3 risks. They strike me as almost being operational. We're highly dependent on nationwide satellite communications. Again, that is outside. If it failed, their whole call center concept goes down. I see the value of that. They talk about intellectual property infringement. That is a reality. Intellectual property infringement happens almost everywhere. That's not a critical risk in my view. They also say that not all rollover accidents can be prevented. I don't think they make that assertion, but their assessment is, since we can't prevent them, this exposes us to legal action. I can't see any court saying, these people are responsible for that tractor rolling over. That is the operator's responsibility and only that. This device is a warning system, the tilt sensor and the audible alarm. Let's say that you go to 7 degrees or 15 degrees or something like that. At some point, whatever's built into the software, at some point there will be an audible alarm, beep, 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 beep. But can the operator of the tractor hear it? Tractors are loud. I've got a lot of seat time. Now, in fairness, I have no seat time in a tractor with a closed station. Everything I ever operated was open station tractors, and I promise you they're relatively loud. But there's no promise made that this thing will prevent rollovers. It will warn you if you're approaching some angle that might bring about a rollover. But they talk about legal action, so I really think that this is very poorly done, and I criticize that because I'm convinced that this is one of the most important sections in a business plan. I know how keenly private equity financiers focus on these things. So now, management and organization. There's a lot of redaction in here, and that was purposeful. There was no reason to reveal anybody's identity to you. Turns out, though, that this is a 2-person venture team. The CEO comes from an engineering background, and he has an MBA, and that as well. The other member of the venture team is VP Finance. again, MBA, I forgot undergraduate degree, but there are critical positions that are unfilled, and there are no candidates identified. They just sort of enumerate them. They say, okay, we don't have anybody for operations, IT, manufacturing, marketing, or customer service. Y'all work harder. Come to the table better prepared. What will you do with all those critical functions unattended to? Potentially, you could outsource IT. You can't outsource anything else, though, I don't think. So there has to be this section again. It's just it's really deficient because it's so light. Now we get to the proposed offering on page 21, and oh dear. Neither of these venture team members had any experience with launching entrepreneurial firms, and with inexperience usually comes naivete. You simply don't know what you don't know. And here's what this offering proposes. It says, we are going to retain 10% for the employees of the firm, not us, not the principals, the employees. We're going to give 4% to the Cobb Family Venture Capital Fund because that venture capital fund committed $60,000 for a seed stage in exchange for 4% equity of the company. What that assumes is the equity will never change, and that's unrealistic. But the point is, 10% to future employees, 4% to the Cobb Family Venture Capital Fund, 32% to the venture capitalists, which is less than 1/3, and unless I embarrass myself, the two founders together retain 54%. So, the venture capitalists provide all the money, take all the risk, and they get a tiny minority interest. They get less than 1/3. My notes say, as I was reviewing this, never gonna happen. Could I be wrong? Yes. Is it likely that I'm wrong? No. Then they talk about, next page, I guess. Yes. On 22 now, and they talk about what you and I might call two liquidity events. The first thing they talk about is investor redemption. So, for the investors who want to convert their 32% equity into liquid assets, that's called cash, we offer, under certain cash flow conditions, an exit option. And on line 2, figure 9, they show the price. So, in a perfect world, 5 years out, under certain cash flow conditions, they'll convert your minority stock interest to cash. That is an investor redemption. Separately, on the same page, in the same paragraph, they talk about investor buyout. They, the principals, intend to buy out the investors. And I did the math. I went to the appendices in the back, and the total cash at the end of year 5, if none were distributed, in a perfect world, if every single projection is hit, if nothing falls short, the best possible scenario is the company to have 5.5 million cash, and the buyout is, it's shown here in the table, in the exit plan, the buyout is 4.8 million. So if that happened, to liquidate the investor's interest of 32%, they would take the entire pile of cash that they've accumulated for 5 years, and they would have essentially nothing to run on. But that also assumes, and this is a very happy assumption, that absolutely every assumption, every projection is nailed. There is no deviation, nothing comes up short, nothing is slower than they have projected. And that's, so if there's a single miss in any projection, the money's not there for the investor buyout. What else we have? Exhibits. Generally well done, except the project plan stops very early in the process. I was somewhat distressed about that. But here's what I promised you. I told you that one of the reasons that I'm using this particular business plan, I know it's somewhat dated, but it's excellent in so many dimensions. There are parts of it that are excellent. There are parts of it that scare me. It's well presented. It's well written. It involves tech. It involves intellectual property. It involves subcontracting. It's relatively complex, even though it's small. So there's a lot of virtue, a lot of meat in this business plan. But the thing that just pushes it across the finish line, the reason that I have used this for several years is I got this plan from a venture capital firm in Louisville. I knew two of the three principals quite well. And I said to them, may I have a recent business plan that y'all considered along with your decision? And they said, well, of course you may. So we decided this would be a good one. We redacted the stuff that hid the personal identity of the venture team. And here's what the venture capital firm offered. These people are asking a one-time investment, first month of operations, of about $500,000. The venture capitalists say, we're ready to write a term sheet. We're ready to tell you what we're going to do, but here it is before we put it to paper. We want both of you to quit your day jobs and become full-time employees, because we're going to offer you $1.6 million. We're going to pay it in stages when you hit milestones so that you can ramp up faster. Get to market faster, get all of your vendors, subcontracting stuff, getting you things to assemble, getting you people so that you can hire marketing folks and get to the OEMs and all these other people. So quit your jobs, become full-time employees, and we'll give you $1.6 million, which is roughly more than three times what they asked for, because the venture capital firm wanted this thing to get to market faster. That's important. Here's what the response was from the new venture team. Remember, at this stage, the new venture team had two people, the CEO and the vice president of finance. The vice president of finance said to the CEO, gee, this is exciting. I don't want to start this business. This was all an exercise. So here's what I will do. I will sell you my interest in this business, which does not have a single customer or a single dollar in revenue, for $800,000, my half of the $1.6 million. That's it. I'm out. You give me $800,000, I'll give you the rest of the company. Knock yourself out. The CEO related that to the venture capital firm, and the venture capital firm said, y'all may jump off the planet. We're investing in a company. We don't tend to take our investors' money and create wealth for someone who hasn't done anything except put an idea in a 25-page business plan. So we have some sort of an intersection there between greed and stupidity, and that is unfortunate. But I want to be able to share that with you because I know what the venture capital firm decided. I know what their actions were, and sadly, I know how the new venture team reacted. So that's it. Love you. And as I say, there'll be one more video. I'll have it up relatively soon as we close in on the end of the semester. It'll be sort of a wrap-up. So for today, we're done. Gosh, I forgot to do anything goofy so that I could pose a question at the end. So this is a no question for attendance verification video. Love you. Talk to you soon. Be well. Bye-bye.